Hello YouTube, I'm Andrew, this is my brother Philip. We have been investing in real estate for over a decade and want to make the 874,312th video on why the real estate market is about to collapse entirely and why you should sell your entire portfolio to us at fire sale prices.
Please.
Yep, it's official. The housing market bubble could burst this year, according to this guy.
Everything hinges on the housing market. If there's enough markets in the nation that got overheated, not to mention the world, UK, Canada, Australia, you name it, they're all in real estate. That's scary.
It could get very, very ugly in the real estate market, but it wouldn't just be the real estate market, it'd be the whole economy.
Last time you were here, you said that the housing market will crash. COVID is going to crash the real estate market.
Yeah. Now, the reason why we think you should sell all your properties to us is, unlike everybody you just saw, we don't think the market is headed towards this massive crash.
I wouldn't say the market is healthy, but in fact it's not healthy, but for the reasons it's not healthy, I don't think we're going to see a repeat of what everyone else thinks we're going to see. 08, it's like, you know, the real estate market is going up so fast, so this is just a repeat, it's deja vu, we're going to see 08. Or other examples, we've seen Bitcoin just skyrocket, then come back down. We've seen Dogecoin come back down to earth.
GameStop.
WeWork gets valued at $40 billion, and then you realize, oh no wait, they're renting out desks, and they're not some, you know, futuristic disruption technology that's going to change everything. But real estate, the dynamics of it do not lend to a collapse.
Now, real quick, we do not have a crystal ball.
Yeah, big asterisks here, caveat.
We think we know what we're talking about, but we could even be wrong. Things could change. No one predicted
Predictions
2020.
don't have a great track record, so we're just going to go ahead and predict anyways, but with a caveat.
This is why we think it's not going to crash like it did.
I think also we should make one other caveat, a caveat to our caveat, and that is the market, the economy in general is a bit shaky. Obviously, we have very high inflation. We had the stock market's taken a bit of a tumble recently. We've got all of the things going on with Russia and Ukraine. If the economy were to goes into a recession in general, which is not unlikely, I would say, real estate will probably be pulled down with it. What we are saying is that the real estate market is not going to collapse, that the real estate market will almost certainly do better than the economy in general if there is a recession. It will not lead the way either. It will be something like an oil shock, like what we're seeing, or the Fed chairman gets his inner Volcker comes out and decides to jack rates up, or something like that. Real estate will still do better than the economy in general. It will not lead a recession, and it's not going to collapse. It's not going to do what it did.
And this is the reason why we don't think people should necessarily be sitting on the sidelines.
No.
That you shouldn't be sitting on the sidelines.
We made videos about that.
Yes.
Don't sit on the sidelines. I have friends who are sitting on the sidelines since 2015 waiting.
Because they just know it's going to crash and they're going to invest at the bottom. And don't try to do that with real estate.
Back in 2018, I was thinking the market was going to correct very soon. I mean, that was 4 years ago. And, you know, but I wasn't looking at the dynamics. It was a feeling. And a lot of this is based on, it feels similar. I remember 2008.
It's going up too much, too fast, too long. Yeah. Yes. It's too hot. It's got to come down. What goes up must come down. But there's underlying reasons these things happen, and it always comes back to the same thing: supply and demand. It is just, you can't beat it. It's undefeated, just like time. You can't beat it. And I think the dynamics of supply and demand are situated to where real estate is not going to collapse.
I mean, prices going down in general, basic economics means that there is more supply than there is demand. That is the exact opposite of what we stand at right now with real estate. There is far more demand than supply, and there's no reason to think that is going to equalize anytime soon.
Yeah.
If you've seen our previous video on this subject, there is a 3.8 million unit housing shortage in the United States. The population is continuing to grow. There's immigration. People are having babies. I mean, COVID's on the way out, it seems. Hopefully, cross your fingers. So the population is continuing to grow. There's this major housing shortage, and you don't get to build houses like that. I mean, you can do like weird things like, you know, some of those mini houses, live van life. You can do the storage container things, but in general, houses take a while, and they have been way behind on building new houses and apartments for many years. Before the crash, you saw over 1 million units every year, 2 million in the couple of years before it. Since then, it dived down below 500,000. It just got up to 1 million before COVID. COVID crushed that, and now we're finally back up to 1 million. But guess what? You can't build a house or an apartment in a day.
You can't build a construction company and the infrastructure to build these houses, and demand hasn't stopped, and we've had a shortage for so long. We're behind. The score is 28-3, and Tom Brady retired. We're screwed. We can't catch up.
Fake news.
So
well, not in any time soon. I mean,
fair enough. We need more than 4 quarters.
Yeah, it's going to take a substantial amount of time to catch up to that shortfall.
Yeah.
Generally speaking, supply and demand are all that matters. But there are other factors here, but those factors aren't working against real estate like they did in 08. We can't say for certain that none of the shenanigans are going on. Obviously, there's some of them, but the ninja loans, no income, no job, no asset loans that were being made, the stated income. Oh, I make $500,000 a year. I don't want to give you any proof of that. I'm just going to say that, and you should give me a loan based on that. The teaser rates, like you pay $500 a month, and then 2 years from now that payment goes up to $3,000 a month. Those things seem to be, for the most part, thankfully, a thing of the past. They're still doing high LTV loans.
Yeah.
FHA will give you 96.5%. Banks will give you 95%. But that's really the only one of those things that's still around in mass.
Yeah. Well, I mean, you see these videos of 40 people trying to make an offer on one single house. It means there's 39 people who still have demand for the next house.
Yeah.
And I don't think that's fake demand. Those are real people who have real assets who are really trying to get into houses. They're not going to just not buy a house, I don't think. I think one of the big differences, might be a little bit unfortunate, but I think it's a reality, is that a lot of the money being pumped into real estate in 05, 06 and stuff like that was people who didn't have a lot of assets, didn't have a lot of income coming in, didn't have a lot of wealth, and they were getting all this paper money to go buy real estate, and that would move the real estate market up.
You simultaneously had several things going on. You had the government was doing everything in its power to get people to be able to buy homes who couldn't afford it. I mean, they were pushing down lending standards. They were suing banks that didn't make loans in certain areas. They were reducing interest rates. At the same time, you also had a lot of predatory lending. People like, I'm just making this loan. I'm just initiating it. I don't care if you can pay it or not. I'll put in the most ridiculous stuff and we'll sell it off, and they'll put it in their tranches. They'll split it up and they'll throw it all over the place. And I'm not saying none of that stuff is happening now, but yeah, you're right. People who couldn't afford houses are buying that.
And now those 39 other people who are trying to get into that house, they're people with good income. They already own a house and they're trying to get into a bigger one. It's real demand with people with real income and real assets trying to get those loans. There's real money behind this.
You're also having other issues, like investors are buying, like we're buying a lot of properties. Wall Street has gotten into the game of buying houses. A lot of people.
There's a whole new asset class in Airbnbs that's taking off a lot of inventory off the market.
That's hurting hotels, but that's taking inventory off the market. You have foreign buyers. China has bought up like a lot of Canadian real estate and stuff like that. So all like Wall Street and Chinese hedge funds and this is
real money, real wealth.
They have a lot of real estate. They can buy it. They're not.
People could say all that money is going to leave, but I don't think that's going to happen.
Yeah, if Wall Street is going to sell, they're going to do it slowly, or they're going to be following a downturn in the market in general, because if they sell it all at once, the second half of what they have is going to be hit by the first sale. So they're going to liquidate slowly. And I think this is generally a long-term thing that Wall Street is not. I know a lot of people are really mad about that, but Wall Street is still a very small percentage of the housing market.
True.
They are pushing this up as well, but they're still a very small percentage. But they're not going to liquidate all at once. They wouldn't want to shoot themselves in their own foot. I mean, they do a lot of... You never know what goes on in the four walls of a bank, but they're not that stupid generally.
And this leads to the last thing. I don't think there's any political will to let what happened in 2007 and 2008 happen for a very long time.
Obviously, they don't have they're not omnipotent. No. They can't stop a crash from happening. But I think the last thing they're willing to accept is another 2000.
There's too much of a scar that no one wants to open again.
And I think there's a lot more political instability now than there was in 2008. And so they know that a bunch of people being foreclosed on, being kicked out of their homes is not going to fly. Yeah. And they are willing to suck up more inflation. That hurts people, but that's a pinch. It's like in 2008 you had a situation where people couldn't pay. Their payment went from $800 a month to $1,500 a month, and they just couldn't handle it. Now their payment is just set. It's $1,400 a month. Maybe usually at least for a couple of years it's fixed. I mean, even on adjustable rates, it's usually you have a couple of years there. So now everything else is getting more expensive. Yeah. Okay, so what are they? They're not going to not pay their mortgage. That's the first thing. They're going to, instead of shopping at Whole Foods, they're going to go to Walmart. And they're going to rent out that back room. They're going to sell some stuff, take a second job. Yeah, all sorts of different things like that. And the government is going to both prop up real estate from the top and the bottom. They're going to prop it up with direct subsidies, even more so, probably directly to homeowners, like kind of like what they did with the eviction moratorium. Direct payments to people who need assistance in so they don't get evicted.
It's such a political loss to be in power and let the real estate market collapse that every politician is going to try to make sure that doesn't happen while they're in charge, and they're going to do whatever they can to keep it up as much as they can.
Just to put it in perspective, George Bush won the 2004 election after it was discovered that there were no weapons of mass destruction in Iraq, and that war was just, well, okay, we're not going to go into that. But then he got obliterated in 2008 after the crash. And so it's like, of course, there's only so much they can do, but they will we can lower interest rates from where they are now. Yeah. They can push them down even further.
They can flood
and they can
money in and do all sorts of stuff.
Quantitative easing to infinity. And at the same time, they can also do direct subsidies. And yes, that will cause inflation to get worse, substantially worse. But they are that is a sacrifice that every indication shows that they are willing to make.
Politicians are going to make that
to prop up the housing.
Now, there's another political class that people don't really talk about that also isn't willing to let real estate values fall, and that is homeowners.
Yeah,
homeowners. They've
constituency that will fall.
Correct, but they've put so much of the resources into their housing. A lot of people view the equity in their home as their retirement. Pensions aren't really a thing that much anymore, so their retirement is the equity in their home. This whole constituency is unwilling.
This isn't a grammar channel. This
is unwilling to let the bottom fall out again and lose all of that.
And they will punish politicians who don't.
Exactly, they're going to vote in the people who are going to prop real estate prices up. They're not going to let their city councils let a lot of construction happen. So this construction problem is difficult to fix because you can't build houses, and cities don't want people to build houses because it keeps prices up.
In 2008, you had situations where a lot of the people who were getting foreclosed on had just bought. Yeah. Like that could be an issue here too, but it's like a lot of these people have lived in their home for quite a while now, and they can't move, they can't find a new property, and that's the issue. So the dynamics between now and 2008 are very, very different. The feeling is the same. Real estate is skyrocketing.
Part of the feeling is not all this stuff is good.
Oh,
so this isn't necessarily good stuff. We're not trying to say this is all stuff we like that's happening.
Shortage. In some ways, it's good for
prices going up is not good for just the overall kind of cohesion of the country or anything like that.
Cohesion of the country is not good for people who are living on the margin. It's not good for people who aren't living on the margin but don't have a lot of assets yet. It's horrible for people, for college graduates trying to get in. Like in a lot of ways, it's terrible. But it
doesn't mean it's not happening.
It does, but it's a very different series of problems than 2008. Just because it feels the same does not mean it's not the same. It is not the same. Yes. And in all likelihood, again, no crystal ball. A general recession is going to pull real estate with it a little bit as the money supply contracts. But there's no reason to see the evidence does not make it look as if there will be a real estate crash of any sort in the near future.
Another thing we can tell you for sure is that the real estate market is hot and is going crazy. So if you want to know more about why that's happening, watch this video from last week.